Welcome to Incorris Canadian Natural Gas webinar. My name is Cameron Gingrich, Managing Partner, Markets and Strategies here in Incorris, and I'll be presenting today's video on liquefied natural gas markets. A quick intro, I guess the liquefied capacity is now 450 million tons per annum, MTPA, which equates to just under 60 BCF a day. And then I guess around 2.5 BCF or 20 MTPA was that brought on in 2020. A little less than the last 10 years, as we saw some of these projects get on put on hold as we went through the oil drop of the 2017-2018 era there. Shipping fleet continues to grow. 35 new vessels in 2020. And regasification continues to grow as well. Cheap optionality can be added by putting increased capacity in various parts of the world. We get into that a little later as well. And of course, the volatility in 2020 due to COVID-19, and of course, we've seen that volatility continue into 2021, as we've seen in Europe. A lot of that shortage of gas from a colder than normal winter in 2020, 2021 proceed into summer, buying a lot of LNG cargoes to refill that storage, and of course coming up short. So through the winter here, we're seeing less gas than Europe requires. A lot of storage being looked at right now in a little cold snap out there. So LNG pricing continue to be volatile in 2021 and of course into 2022 as well. Looking at liquefied capacity by country, so this is blue lines show current capacity. That's the 550 MTPA that we currently have, and of course new capacity that's coming on in the next 4 or 5 years, another 140 MTPA or 18 BCF a day in the orange bars. Coming up there, you see large increases over that time period for Canada, Mozambique. Of course, the U.S. continues to grow, and Qatar is looking to take the final investment decision on its Northfield project, which will add 32 million tons per annum, or 4.2 BCF a day, and will bring Qatar back to the highest liquefier in the world, as we saw in the last I guess 2 decades, where Qatar has been pretty much the highest liquefier in the world due to that huge Northfield asset. Here we show how this has changed over time, this capacity growth here. We see by the end of 2026, almost 600 million tons per annum, or almost 80 BCF per day. 80 BCF a day is about where the U.S. is in terms of total demand currently. So put some perspective around there. You see in 2020, the U.S. added most of the capacity, Freeport, Cameron, Elba Island, all bringing on capacity online in 2020. When we look at this chart, we see huge growth in 2000 to 2010, just under 10% per year in terms of liquefied growth. From 2010 to 2020, we see still a standing growth, basically doubling, but growth rate of 5.5% or so. And then as we go from 2020 to 2026, we continue to grow, continue to add capacity at albeit a slower rate of 3.5% per year type of growth as well. Thinking about regas by country, here we show Japan far and away the largest regasification capacity, 200 million tons, or almost half of overall worldwide capacity. And then Korea and China follow close behind. In the blue bars, that's the capacity. Orange bars show actual regasification in 2020. And you see overall average utilization in the 43% for the world. And of course, Egypt, which basically has shut down its regas for a while now, using gas for industry and domestic use. The U.S., as we've gone from 2000s, where gas was required to bring in to balance demand and supply, to the shale gas revolution, where now gas is being exported. You'll see U.S. basically using regas in New England to meet kind of peak day requirements in New England, using that as a design day asset. Mexico, soon to be a exporter of gas with the Baja reversal, and Canada again utilizing that Canaport in New Brunswick to balance Canadian markets and New England markets as well. Looking at export import countries around the world, here we show in the blue is LNG export countries, and in the orange we show LNG importers. And then the size of the arrow, of course, indicates how much is being flowed in 2020. And you see that Australia, Qatar, serving the Asian market, Japan, China, Korea. You see the U.S. Gulf Coast looking to service that Asian market as well. This line to the Europe from the Gulf could increase as we see that geopolitical tension with Russia occurring currently, and expect it to continue. You could see a lot of this regas develop in Europe as an option to Russian leverage on the energy markets in Western Europe. LNG exporters, here we show Australia, of course, currently the biggest producer of liquefied natural gas. Qatar, US close behind. Essentially, the top 5 countries, when you put Russia and Malaysia in there, have 71% of total market share. Of course, diverse producers within Australia, US, and Malaysia are basically limit market power, but Qatar and Russia basically have a lot of bargaining power in and to themselves as well. Showing development of liquefied natural gas earlier. Looking at LNG shipping, I might get Lev to discuss this this slide here. Lev, you there?
Yes. So let's take a look how actually LNG is shipped, and there are 3 different technologies how this is done, and each technology they have different cost. This cost fluctuates depending on how many actual vessels are available and what is actual demand and supply for LNG. But steam turbine, which is older type of vessels, at the beginning of 2020 had $70,000 per shipping per day, and in year 2020 it's dropped to $20,000 for per day for shipping using steam turbine vessels. Cheapest vessels can still remains steam turbine, but low pressure, low speed dual fuel vessels are usually most expensive. It's a new vessels, and they have significant demand of this, and it's quite effective in terms of using different type of fuel and saving fuel and saving gas during their trip, because this type of shipping technology doesn't burn very much gas or LNG inside vessels.
I guess I would also add that steam turbines tend to be older vessels, and dual fuels tend to be the newer vessels. So the size of the vessel is steam turbines kind of in around 3 to 4 BCF of capacity on the vessel, and then the newer dual fuels are more that kind of 6 BCF a day. So even though you might have a higher charter rate, you'll have a more or less similar unit cost in terms of per ton or per MCF of overall LNG shipped.
Yeah, newer vessels with this dual fuel and low pressure, slow speed dual fuel. It's built mostly, so new vessels which will be available. There are like a new type of use new type of propulsion technology, and because they're really big, they look a little bit different than we see it right now on the right low side with this circular tanks. They have rectangular tanks, and they're much more efficient than older steam turbine vessels.
Perfect. Thanks, Love. Looking at U.S. LNG projects, as we showed earlier, they added the most LNG over the last year or so, and you're seeing here the operational in the blue, and the under construction projects in the pinky fuchsia, I guess. So Freeport, of course, completed recently. Corpus Christi just up and running this year, and then Sabine Pass, of course, 5 trains now going, 22.5 million tons per annum, and adding another 6 train or for a half BCF a day of output in the next year or two. Dominion reversal of Cove Point a couple years ago, running about BCF a day, just under. Elba Island, 2.5 million tons of the existing regas facility reversed, full capacity up and running in 2020. Cameron LNG, the Semper project, completed in 2020 with 3 trains now up and running. In terms of under construction, showing the Sabine Pass, of course, the 6th train. Driftwood production starting in 2027 for a large overall project. Golden Pass, of course, the ExxonMobil taking that regas facility and turning it into a liquefier as well. In the next couple of years, up and running with a large facility as well, 16 million tons per annum. And then the Venture Global LNG, they're looking to have a small modular trains with first 2 trains up and running in the next year or so. So a very quick from feed to FID, and now under construction in that facility. We're looking for a total capacity of 1.3 BCF or 10 million tons, hopefully by that 2025 to 2027 time period. So when we look at the U.S., you see these ExxonMobil, you see Cheniere, you see Kinder Morgan, Dominion, Sempra, large players, and then you have a few of these smaller guys, Tellurian, Venture. So basically having a lot of pipe infrastructure in and around the Gulf Coast, and access to pipe, and of course access to Haynesville, access to Permian supply as well, very important, very easy to connect to the major pipelines moving from South Texas into the rest of the U.S. Allow these smaller players to access that supply and come up with these small modular trains. We'll juxtapose this against Canadian projects in a slide or two as well. Alaska LNG, huge project, and again, this is a little different than the Gulf Coast. This a major pipeline, you know, $20-25 billion pipeline has to be built across Alaska. But this does a couple things. It provides Alaska gas to Fairbanks, to Anchorage. It allows Point Thompson to be developed. It allows Prudhoe Bay to incrementally be developed on the oil side as well. So right now, oil has been in decline. It's been difficult as those oil fields have been gassing out. A lot of associated gas is reinjected. And Point Thompson, of course, a lot of associated oil and condensate available if you were to start producing there as well. So it allows a lot of oil to be produced, and the utilization of the oil line across Alaska will continue for decades if this gas line is built. So there's benefits for developing the gas and spending the money on the gas pipeline. So once you get that across Alaska, then you're up and running with 3 trains, 20 million tons per annum. There was a MOU with a Chinese government that has since expired. Recently, the project received FERC authorization in Q2 of 2020, and then in the last month or so, Army Corps have provided approval. So final EIA should be coming in the next few months, I think, certainly by second half of 2022. The U.S. government has a 30-year, $25 billion loan guarantee available for this project, and they're allowing a 80-20 debt to equity, which of course reduces the cost of debt and reduces the amount of equity required. So decreasing or increasing the overall project economics and decreasing unit costs on this project. So it's still a long way to go for this project, probably not in the next 10 years, but certainly plodding along and has certain potential for sure. Looking at Canadian projects here, of course, the big one is LNG Canada, the Shell project with partners Petronas, CNPC, Mitsubishi, and Kogas that has been moving along and took FID in 2018. The Coastal Gas Link from Summit Lake there to, from the Montney, the dotted line there to Kitimat is being built currently. There's been disputes along the line which have delayed and increased costs on that pipeline, but it's under construction, underway, and once up and running, there'll be toll issues between the developer, TC, and LNG Canada, but certainly we'll have gas going then. So that's much like Alaska. That's an important point for Canadian projects is access to steel in the ground. So when we think about LNG Canada, once they have that pipeline up and running, it's expandable to 4 BCF a day. So you drive unit costs down by half once you got that pipeline up and running. If you take the second phase and add an incremental 1.8 BCF a day or so of on the third and fourth train from LNG Canada. So it's almost a no-brainer once you got that pipe in the ground, and the first phase, the first 2 trains up and running in 2024, 2025, time era that you continue building and incrementally increase capacity and drive down unit costs for the whole project. Cedar LNG, they're First Nations in Kitimat, and they have negotiated an option for capacity on Coastal GasLink as a part of their partnership with LNG Canada. So recently, Pembina has partnered up with the Haisla, the First Nation in Kitimat, and they're thinking about a floating terminal, 3 million tons or so, almost a half BCF a day of capacity. And an important part for that project is that access to steel in the ground, access to the Coastal GasLink. Wood fiber, of course, has been a long-awaited project, supposed to be up and running 2016, 2017. Smaller. They are working with the Squamish First Nation, partner with them, and they recently partnered with an engineering firm, which sent positive signals throughout the industry here in Western Canada. And also, more importantly, in my view, they've taken capacity on Enbridge T-South, just under 500 million per day of capacity is now controlled by them on Enbridge T-South. So that's a very positive development in that project, and should provide the final go-ahead access to steel, important for Western Canada projects. Tilbury, a small LDC peak shaver, is being grown and now is using expanding to just under 500 BCF a day, and with the Fraser River being dredged to provide for an export opportunity and the ability to utilize that facility year-round rather than winter peaking. So that's certainly a important project, smaller project, but expected to grow steadily as we go forward. And then the final one, of course, the Rockies LNG partnership between the First Nation, Rockies LNG, which consists of half dozen to 9 or so producers, Montney producers, and Western LNG, which has a liquefaction technology. So they're looking at 12 MTPA or just under 2 BCF a day. Pipeline options are being evaluated. So that's a very important point there too. They do not yet have access to steel in the ground. Of course, when you look at LNG Canada and the TC Energy Coastal GasLink, it was expected to be around that $4 to $5 million or billion type cost for that pipeline when first proposed. It's now expected to be in the 6.7 billion type costs. And of course, if you're building a pipeline for the Rockies LNG, you really need more than that 12 MTPA to unitize those costs effectively on a upwards of a $6 billion pipeline. Very difficult to see, getting 7, 8 of these producer board of directors to all agree on this project. We're looking at probably around $500 million to get it through regulatory, get it to FID. Certainly the prerogative of these smaller producers is to return cash to shareholders, as we've seen over the last year. So it'll be interesting to see how that Rockies LNG facility plays out on a go forward, and see how they make their economics work. In service for them is 2020. So spending $500 million on regulatory, potentially to spend $20 to $30 billion in terms of pipeline and liquefier as well. It's difficult to see how that project's going to make it all go around. But certainly they have good people in place managing that now. So if anyone can do it, certainly the management team at Rockies can. But we're not putting that in our forecast currently. We basically have the Shell-led facility coming on stream in that late 2023, early 2024, and then growing up to capacity 2026, and then basically doubling capacity as trains 3 and 4 come online. Lower Mainland, we see the wood fiber and Tilbury growing out to 2026 when wood fiber comes on, and we expect just under 4 BCF a day of flows on Canadian LNG exports. Again, potential for another half or so B a day from that smaller Haisla-led Cedar LNG project as the Coastal GasLink comes on, and Pembina and the Haisla work together to bring that to completion. It could be that 2029, 2030 type time period. We'll see as they go forward, as they reach FID. That might come into our forecast on a longer term basis as we go forward. Overall, for North America, we're seeing the growth going from almost nothing in 2016 to over 8 BCF a day in 2022, and then doubling again to 17 BCF a day as we head toward 2030. It looks like our labels have slipped. But yeah, incremental almost 11 BCF a day over the next decade. This Henry Hub, lower volatility than we've seen worldwide. We're seeing the ability to add a lot of supply in a hurry as we see pricing signals from this summer translate to increased flows. And of course, Henry Hub price recalibrating back to that $3 handle. We expect the worldwide players to continue to use Henry Hub optionality to leverage other suppliers worldwide, and really, if you're looking at Europe, building a regas and looking to North America for incremental gas, which you can call on if required, utilize North American pipeline and storage network, and of course resell at a liquid hub across the eastern seaboard. If you need less gas due to a warmer winter in Europe, it's just makes a great match for those folks in Europe. So we see continued development, stronger links developing between the Gulf Coast and Europe, especially since we see capacity limits kind of coming close to being reached in the Panama Canal currently. Australia, of course, big growth there. You're seeing here the history of where they've gone from nascent industry to one of the biggest in the world. Australia now has a great amount of capacity available. Cost inflation is now behind them, and of course now it's operation efficiency that they're looking to develop as they go forward. Potential for expansion of the Wheatstone, but a budget of that $34 billion, as we talked about with the Canadian projects as well. Huge budgets for LNG liquefaction capacity. So it's really, for the most part, driven by super major ability to look forward and develop and execute on these projects. Russian gas, Lev, do you have anything to say about what we're seeing in Russia these days?
Yeah, Russia has a major advantage in terms of their LNG because LNG first of all built in very north area, which requires low cost for liquefaction. It's extremely cold over there. And second thing is they almost don't require any pipeline. There are wells very, very close to the shore. Finally, it's a conventional gas which drilled by vertical wells, and these wells are extremely productive. It's between 3 to 10 millions per day, which makes production of gas in this northern area very cheap. The disadvantage of these projects are they're quite far away, and major supply, demand is in China or Japan. So they need to ship on special type of ships. It's like icebreaker type of ships. However, it's warmer right now, so it's not so bad. They have to ship it through either from Bering Strait or around Europe through the Suez Canal back to China. But Russia would like to maintain their market share and increase it significantly because they believe that this is the future. Their revenue from oil eventually over years can drop, and 75% oil and gas revenue in Russia comes from oil. So they're putting significant efforts towards increasing their both pipelines and LNG capacity. So they built already, and production started on Yamal LNG project in 2017, which is very, very big project. And they supposed to start production on another really big project in essentially across of bay from Yamal on Arctic LNG. It's done by some company with government backing, and this is one of the main area where government try to invest a significant amount of money to grow their business opportunity. So Russia would become one of the major player in LNG market worldwide, and they try to capitalize early their approval and the regulatory process very cheap. They set up manufacturing facility in order to build barges. They built LNG on barges in Kola Peninsula, and then they tow it towards this Yamal or Arctic LNG. They set up processes to make it relatively cheap. Will it be really cheap? We will see. At the beginning, obviously, they need to pay off their capital expenditure, but they will be one of the first few LNG suppliers in the world.
Hey, Lev, we think about Montney full cycle costs in that kind of low 2s to 250 type per MCF. What would we think about this Yamal or Arctic in terms of resource full cycle cost?
It's very hard to compare because Yamal also includes return on capital. So Montney includes return on capital and royalties and taxes, and Russia royalties and taxes works to such a way that whatever company can pay, they will pay. But in order to compare it, I would say that full cycle cost in this area would be below $1.
Oh, wow. But you're offset by the, like you said, the icebreaker LNG tankers and larger transportation costs, but that's still fairly low. Thanks, Lev.
It's very low. Yes, it's correct. It's mostly because very short pipeline, maybe below 100 kilometers, and very cheap drilling and completion cost.
Perfect. Thanks. And with that, I guess we've bumped up against our time. I'd like to thank everybody for their attention today. And of course, if you have any questions, please don't hesitate to contact Lev, myself, or of course, our sales email as well with any questions. If you require anything from us, please don't hesitate to ask. With that, I'll adjourn today's webinar. Thank you.